All right. Hey guys, how's everybody doing? Happy Sunday to you. We're going to get right into the analysis. We're going to do the usual suspects: oil, indices, the dollar, gold, silver, and maybe a currency pair or two. All right, guys. Now listen, remember, if you're new to watching my video and you're getting some value, please hit the like button. It helps me out a little bit. And hit the subscribe button if you haven't yet, so you can get updated anytime I make a video. Hello to everybody inside the Professor Trades Club. Man, we've been doing some great things with Armando. What a great teacher with the psychology lessons alone and everything else he's teaching. Man. All right, guys, let's dive into the analysis through the lens of Elliott wave theory. All right, starting with crude oil, looking at the daily. I've already done a video for the club members that went into great detail about this. Actually, that one's on YouTube as well. So it's moving in threes. And the idea here is we get one more shove up into this zone. This would be ideal. Based on Elliott wave, it's moving in threes. So the way I'm counting it is 1, 2, 3 up for the A wave. A very typical B wave coming all the way down. I like to use the orange box anytime I'm tracking a B wave. And then price came up. Now this, you could count this in 5 waves or 3 waves. Either way, the outcome is the same. It got rejected right here and came all the way back down. And then now I think we're coming up again in a C wave, which is, again, we're going to measure it in 5 waves. This C wave here, it's arguable as to whether or not it was really an A, B, C versus a 1, 2, 3, 4, 5. I'm not going to get all crazy about these academic things because I'm really more focused on the price action and levels. So the way I'm viewing it is A, B, C, and then this is just another A, B, and then now we're in C. Now there's another way to view this, which is as a diagonal: 1, 2, 3, 4, 5. Now, the reason I say it doesn't really matter and it's academic is from this low, whether this is a B wave or a wave 4, either way, we're looking for a 5-wave impulse. Because a C wave, if it's a C wave, it's very likely going to be in 5 waves. If it is a 5th wave in a diagonal, it's absolutely going to be moving in 5 waves. Although you could argue that. You can get all academic and debate. I don't care about that. I care about price and structure. Okay, so Elliott wave is just providing some great clues, one of which are these fib levels up here, 200 fib level and the 236. It's also the 100 in orange up here is the typical target for A, B, C. And if you've watched my last educational video, you know that we call that A equals C. So if price wants to come all the way up to almost 70, really, right up into this area, I'm going to consider that A equals C. I don't know why that's so huge. Let's make it more reasonable. And I like to keep my 3-wave corrections. I like to keep them either orange or yellow. Most of the time yellow. But this is the general area that I would be looking for resistance if it makes it up there. All right. Now this is the 8-hour chart crude oil. Notice you have the bottom dots. Notice this line going across here at 67, 66. That's just a structural point, nothing but wicks above that line. Well, you got a candle body here, but the point is you get the idea. Price is constantly getting rejected from this area, and it couldn't get any candle bodies and any continuation until now. And another way to look at this, forget Elliott wave for a second. It came up to here, then it came down and back tested that line. So just based on pure price action, I like the idea of this going higher from here. And then you've got this big green 8-hour candle from Friday, and you've got bottom dots. So on this longer time frame, in terms of both structure and price action, it appears that oil is going higher. So now we'll just drop down a level in terms of time frames. We'll go to the 2-hour chart. Now here, I've got a little volume study going. And before I get into the details and the weeds of Elliott wave, notice that the volume at the lows oftentimes gets into this, call it parity or equilibrium, where the buyers and sellers, they're done fighting. They're like, okay, I give up. The sellers are not selling anymore. The buyers are barely buying. It's almost identical, sellers and buyers. These are contract counts, by the way. And that's what I see a lot when I use this tool looking for bottoms. Okay, so then the same could be true in reverse. If you're looking for resistance near the tops, you're going to see parity. First of all, you're going to see super low volume, and you're going to see very close contract count between buyers and sellers. You have to keep in mind on this tool that I'm using, you have to be careful because it's only counting the contracts for whatever price action you can see on the screen. That's very important to know about this tool. By the way, it's one of those Leviathan tools, open interest, volume study tools. Leviathan has some amazing tools for free in TradingView. Anyway, so you can see the lows. This is what I'm counting as the ABC. This is what I was just showing you on the larger time frame. But now you're on the lower time frame. You're seeing the details. 1, 2, 3, 4. This was a very big area of interest later in the week, last week on Friday. And I got to say, if you were in the Professor Trades Club with me in the Elliott Wave Room, we nailed this. So even as day trade scalpers, which is what we are, we dropped down in the lower time frames and we nailed these lows and added to our longs. And actually, I've peeled some off, but I'm still long for sure. I'm primarily a day trade scalper, as most of us are inside of the Professor Trades Club. But now we are looking for a continuation higher. Does that mean it's going to happen? Of course not. There's a couple other ways I could be looking at this. If this area wants to be the top, it's going to come back down. The first clues is going to make a new low. So what I'm looking for is no new lows in oil. By the way, this is what contract is this? CLK. That should be, what is that? Let me look at this other. Okay. Yeah. So I think that's oh, frick. Tell me what month that is. Anyway, it's the K contract on this data feed. Okay. So, bam. Now let's go down one more level. Okay. This is that low that I was saying is wave 4. And this is the beginnings of what we think is a 5-wave move. So if this is only 3 up and it's not going to go any higher, what's going to happen is we're not going to make a new high above this resistance. It's not going to make it above this pivot. It's going to come back down, which in and of itself isn't a deal breaker. But if it makes a new low, that's going to shift my view a bit. And I certainly will not still be in longs if it comes down here and makes a new low. What I'm and really another line in the sand would be where I have the low of this wave 2, which just happens to coincide with the 382 or the 618 right here. Just call it, well, I can tell you exactly what that low is actually. I got to get this tool out of the way so I can see the low. Right at that exact level is 67.88, which actually happens to coincide exactly with the 382. So far, this is looking really good as a wave 4 low. This is very micro. And then now we've got a 1, 2 in place. And what we want to see is a 3, 4, 5 up into this box. Can it exceed that? Sure. But at a minimum, I want to see 69.50, I think is a perfectly good level. It's a nice whole number. Also, the 200 fib of this entire structure is 69.49. There's also a ratio box right in here. So the parameters are, if you're trading crude, you don't want to see it in your long. You don't want to see below 67.88, and you definitely want to see it make a new high and get up here to really 69, and then, get a pullback, then 3 waves. I'll measure for that when the time comes early in the week if this plays out. And then we want to just see this thing get up here and get closer to 69.50 at a minimum. And it could extend a bit, clearly. Okay, so that is crude oil bullish, but just locally bullish. Overall, I'm actually not bullish. because I think when this price wave is done, because it's moving in threes, if it gets up into this area, and look at this, this is a structural point, 7013, nothing but wicks over here. So, you know, I didn't put an arrow over here, but the idea would be if this plays out, okay, and gets up into this area, just call it 70-ish. The idea is it could be a great short opportunity, but one step at a time. One step at a time. All right, so that's crude oil. And let's see, what's the next? Let's look at the dollar, and then we'll look at metals. So the dollar, it's been teasing us. It came down into this zone, which is what we were looking for, and it sure did deliver. So now what my challenge has been, I'm looking for a 3, 4, 5 of 3, because, you know, fractals are everywhere, and Elliott wave really is good at identifying the fractals. So the idea is wave 1, 3, and 5 in an impulse, in a standard impulse, are made up of 5 waves as well. In other words, they subdivide into 5 waves. So this is wave 3. But I don't think there's enough waves in place for this to be the end. I don't think this is the end of wave 3. Plus, the way I'm measuring it, it really needs to come down more. So I'm looking at these bounces as potentially wave 4. So it is very tricky because it didn't come up high enough there for a wave 4, and it came down a little lower. Then it didn't come up high enough there really for a wave 4, and then it came in a little lower. Now it's finally come up enough for a wave 4. So could this squiggle a little bit more? Yeah, this is the ideal place for this wave 4 to terminate in the dollar. And the metals have come down a bit. So ideally, what I would love to see is that this come up a little higher into these yellow fibs. I know I'm splitting hairs here, but I'm just telling you what my preference is that come up. This comes up a little higher while metals get more downside. And then this can finally roll over. Once metals have completed for more deeper into their wave 4s, which we'll get to in a second. So as the dollar comes up, would be great if this can get one more shove higher, at least to the 382, which is 104,400. But ideally, wouldn't it be great if this just pops up a little bit more? And the way I'm viewing this, any wave 4, I'm always looking initially for a 3-wave move. There can be more complex, kind of like multiple 3-wave moves that are kind of connected together. You can see that in the position of wave 4. For right now, I'm keeping it simple, and I'm just looking for, because this could actually be a wave 4, a wave 4 of 5, which would mean this needs to come up one more time. Okay, and then the idea is from there, I can take a measurement for this should come down then in 5 waves for wave 5 of 3. And if this coincides, if this coming up coincides with metals getting their bottom, and then this comes down, then metals can start working higher. But, you know, trying to pay a lot of attention to correlations, not really a good idea. I really shouldn't have even spent that much time on it. Treat each chart on its own. And what I can say about this DXY chart is that it is bouncing into resistance. This whole area looks corrective to me, which means it is going against the trend. And unless something impulsive starts to play out from here, I'm going to look at any bounce as corrective and expecting it to get terminated somewhere in here and come back down lower. That's the dollar. And just for context, if you look at the dollar weekly, now I had to change this view once when I thought maybe it was getting rejected. When it got rejected the first time at that 100 fib, I thought that maybe that was the top of the move up, but I was wrong, and it came up one more time. But, you know, it did catch the 1236 fib right in the resistance box that has been on my chart for quite a long time. Again, the longer time frames tend to be more reliable. That's true with any kind of methodology, but we always look at the longer time frame to get context, and then we drill down. So the idea here is that the dollar, it's going to bounce, even if we just covered the nano on the dollar, right? The DXY. We just covered the very small degree compared to this. This is a weekly chart. But all of that action that I was just talking about is just right in here, right in that little area is what we're looking at on the 2-hour chart. But the idea is that this is just the beginning of this C wave. So, if we get a 3 and a bounce, a bigger bounce and a 4, and then a wave 1 or wave 5 of 1 that puts us down to here, then I'll look at this as a completed wave 1 of C. Then you get a bounce for wave 2, and then you get the fireworks in wave 3. Then you get a wave 4 bounce, and then one more shove down. And these are just standard yellow fibs. If you've been following me at all, if I've got yellow fibs on there with the targets of the 100 fib, the 1236, or the 1382, and it's in yellow, I'm looking for a corrective wave, meaning this whole thing is an A, B, C correction, which I'll count as wave 4. All of this could happen while metals is just ripping higher. That's the concept. That's the idea. You tell me if gold has been strong lately. Has gold been strong lately as this dollar has just been dropping? Yeah. Okay, so that's the dollar. Now let's go back and look at gold. Gold has been a maniac. The idea is this wave 4 done? We were looking for this wave 4 prematurely. It just kept extending. It just kept extending. Now we finally have a pullback, and the question is it done? A typical pullback for a wave 4 typically gets down to the 382. This hasn't even made the 382, and it already bounced up. But a logical way to count that would be that move down was an A wave. We're in a B wave bounce right now, and then we can finally get a C wave down for wave 4. Is that going to happen? I don't know. It could be, the bottom could be in already because gold has been disappointing on the pullbacks. It has been so bullish that the pullbacks just aren't enough. Like even this next higher degree wave 4 didn't even hit the 382 either. This 382 up here didn't get hit either. So if we drill down now to try to discern what is going on here, you could argue that this is the A wave and that now we're in a B wave bounce and we're going to get a C wave, one more shove down. Now look, the volume study, which I covered a little bit in oil there, is the same concept. The last time this came down in this area, or really what happened is when it came up through this zone right here, this is a supply-demand zone from the past, price sliced through it like it was nothing. And look at the volume. I don't know that I've ever seen, well, of course I don't look at this volume tool every day on every instrument, but this volume tool is counting contracts, and it counted literally 0 sells back on Thursday, March 13th, right around the open when gold just shot up, straight up on the 4-hour candle here in the morning. 0 sells recorded. I don't know, that sounds like a mistake, but plenty of buying, 21,000 long contracts just in this little area right here. So some would call that liquidity, which means price would need to come back. And this is a very reasonable area for a wave 4. So you've got a massive imbalance. I don't know, whatever you want to call it, a liquidity zone, a supply-demand imbalance, an actual imbalance. It coincides with fibs where a wave 4 should be. Price has massively overextended for this wave 3. Even internally, this is extended to the upside. So it finally did come back. Look, if bulls are just crazy and maniacal, then yeah, it'll keep going. But, okay, let's go down one more level. So this price came up on Friday and wrecked. This is a perfect impulse until this potential wave 4 got above and encroached upon the price territory of wave 1, invalidating this as a standard impulse, which is why I put the yellow question mark there, because maybe this whole thing is just a 3-wave correction and it's over now and gold is going higher. But that is not a foregone conclusion. It is totally possible for wave C to be composed of a diagonal, which just means wave 1, wave 2, wave 3, and then in a diagonal, wave 4 comes back up and gets into the price territory of wave 1. So I'll allow this wave 4 to come up a little higher if it needs to, but ideally, it gets rejected somewhere in this zone. I mean, another way to look at it, forget Elliott wave for a second. Just forget Elliott wave for a second. This zone held a support once, twice, 3 times, 4 times, 5 times. Then it finally broke here, got a corrective bounce because there's nothing impulsive about this. Then it totally shit the bed. I'm sorry, excuse my language. It totally rolled over. And then it came back up, and what is it doing? You could argue that this is back testing the zone from below. So forget Elliott wave. Support, support, support. It broke support. Then it really crapped the bed. And now it's coming back up to test support. And then guess what? Look at where I've got this potential wave 4. And it's not because I wanted to put it there. It's because that's where the 382 is in blue. The 382 in blue is there. But look, if I drag this over, this is the area of the previous wave 4 of one lesser degree. Even though this wave 4 only hit the 236. I mean, that is a very shallow wave 4, but it is what it is. It burned off the time. It burned off the wave 4 in time rather than price. An ideal wave 4 would have come down in this similar amount of time lower, but it didn't. But it went sideways for longer. So it made a wave 4 in time rather than price. And now we're getting the 1 degree higher of a wave 4, which this target, based on this 382 and these fib levels, which are, these white fibs are measuring simply the C wave, which should be in 5 waves. And the way I'm measuring this coincides with that supply zone at the 1764, because the wave 3 was shy, didn't come down quite as far as I would have liked to have seen. I would have liked to have seen the 382, because at least then I could have called it an A wave, or had an option to call it an A wave. But look, it already did a shallow A, B, and this is a potential 1, 2, 3. This is a wave 4 and a diagonal. So here are the parameters. If it gets back up above, and this is the April contract, the 3,040 level. If gold gets above the 3,040 level, is less likely that you're going to see this blue box again. Much more likely that we're going higher in wave 5 already. If this gets rejected in this box and just cannot get above 3040, the idea is we want to see a nano 5-wave move down, followed by a 3-wave retrace, and we want to see another move like this. We want to see another wave 3 happen over here, and then get another 4 or 5 bounce down into this zone where we can start layering into some longs. So this whole area has been very difficult. I have not traded it very well. I admit it, because it's been difficult. And with the dollar doing what it was doing, it's no wonder why gold has been very tricky and indecisive after a very long period of it behaving, I would say, very well. I mean, from an Elliott wave standpoint, these fibs, these zones, and these labels have been very, very good for a long time. And then all of a sudden here at the top, it's gotten very difficult. So I'll just leave it at that. You've got the parameters, right? And I'll think that the wave 4 is really not finished if price can come back down and dip below, just call it 3,015. If price can get back down from here and get below 3,015, I think it's much more likely we're going to come back down, just call it 3,000 or lower. But anywhere down here, I'll be using small contracts, small size positions to layer into longs if I can get it to see it. If it can come back down here in 5 waves from wherever it tops out, I'll be getting long. Now, if it breaks out and goes up, what I'll do is wait and measure the nano stuff and look for a 3-wave pullback to start layering into longs. I don't like buying breakouts. There are too many fake breakouts. Every now and then I'll buy a breakout. In fact, on my gold chart, now that I'm going to contradict myself, I put this buy box here, that's buying the breakout, and I put another buy box here, that's buying the breakout. But I did that because of the context of Elliott wave and a few other things like volume, for one, and feeling like the low is in, and structure of price. Anyway, it worked out that time, but I don't like to do that. I would much rather have price move to a reasonable fib and then get rejected and have a three-wave pullback to layer into longs that way. All right, silver, I'm not going to talk too much. I'm going to try to keep this real moving quick. Here's the daily. It's just holding on for its life at this pivot zone. I mean, look at that. Wick down and then it came back up. Silver, man, it's driving me crazy. I had some pretty bad silver trades last week. But, you stay small enough, but silver moves so much. I mean, I got dinged. I fought for it, made it back because I ended up just shorting once I was wrong and ate dirt. Then I flipped. I try not to be attached to my views. I just look at the price action and be logical and look at the structure. So at the moment, I mean, you look at the three massively red candles and almost breaking structure. So silver's, what a pain. When it works, man, you can make incredible gains in a short time in silver, but it cuts both ways. So here we are coming down, holding on for dear life right in this zone here. So I don't really have a lot to say. I don't have an edge in silver right now. I thought I had an edge last week to the long side, dead wrong. Made it back on the short. So I'm going to keep it really simple. And what I think I would rather do is wait and just observe silver, think about observing the dollar, what's going on, and try to get clues. But if you just simply do zone to zone, and this is the thing that Armando, the professor, has revolutionized the way I look at markets over the last, I've been in the club now almost from the beginning. So I think it was November I joined. But if you can just learn how to train your eyeball to look at the structure, market structure, and then add Elliott wave and use the Elliott wave stuff on top of that and use a few technical tools, you're going to start getting edges. Maybe not in silver. But look, I would be more inclined to short again. If this can keep coming up, and then I'll drill down on the nano, and this just looks like a overlapping corrective action, nothing impulsive here. And I'm measuring stuff all the time. In the last educational video I made, which was just recently, by the way, if you're new here and you feel like you're getting value, hit the like button and subscribe. I appreciate you hitting the like button. It helps me out. Just try to get some more folks to come in and join the club. We're doing amazing things inside the club. So here's an example of a little Elliott wave. Now, I'm not going to stay here and spend a lot of time here, but I'm just going to show, I'm just eyeballing this, right? If this is kind of like 1, 2, 3, 4, 5. So I could, and I'm not going to do this as exactingly as I normally would, like getting it exactly right on the penny. I'm just doing this because I can see this structure, but I want to show you with the fibs. I already see potential for a 5-wave move down, but let's see, 34,605. So let me just move these over and see where these fall. 34,6. So look, now when you've been doing this as I have and put in your 10,000 hours, you're going to just, like I just did, see it with your naked eye, but then you measure. So look at that. Price came down to that zone is based on supply, demand, and price action. I had not even measured these, but now that I measure it, look at that. It's a 1618. So the way you could think of this, but 1, 2, but I don't like this big hump in the middle, but regardless of the fact that I don't like the structure, let's see, 1, 2, 3. Okay, well, what was I just saying before I even started doing the Elliott wave? I was saying if price, just based on structure, if price comes back up from this zone, what I was going to say is if this continues to move in an overlapping corrective manner, I'd be more inclined to try to short it from this zone. Well, now that I've put these measurements on here, this is the zone where you could expect to look for a wave 4. So, and then what we'd be doing is looking for this to continue lower. So now I'm not going to burn more time on this video getting into the nano, because if you're not a club member, I still want to provide value for you on these higher time frames. So if I just simply go back to here, and by the way, this is a perfectly reasonable thing to do. These levels are good, in my view. These levels are good. And I'll just add another one here. in general, these levels are good. So if this price cannot build an impulse up and out of here, I think there's a tremendous potential short opportunity in silver. I know that's what. Meanwhile, I'm talking about how bullish everything in the dollars, going down. So we have to wait and see. I don't have an edge right now. All right. So let's see where this bounce goes, because, all right, one more measurement, because I just can't help it. Look, if you want to get into LA Wave, you got to go watch the last video that I posted on my YouTube channel. It's very educational, and it's all about how to measure in threes. Right now I'm measuring for 4, and the way you measure for 4 is you put the first click. You're only going to get 2 clicks, right? Because you're doing fib retracement, and that's it. Not fib projection, fib retracement. 1 click at the top of wave 2. Bring this fib tool down and put it at the bottom of where you think wave 3 is. And then what you want is the 236, the 382, and the 50% fib. So let me just add the 50% fib, because sometimes I have that turned off. And then I'm just going to drag this over because I don't want to confuse you. The blue area is reasonable for a wave 4 price territory. And isn't that amazing? This is where I was saying, just on price action in zones, this is where it might be reasonable to look for a short, especially if you really drop down to this nano and look for impulse versus corrective. Could be a nice short setup here, because wave 5, if that's the case, wave 5 is going to bring you much lower if it's going to work out in a 5-wave move, which could just be a giant A wave and you're getting a much deeper correction, but one step at a time. So really, this is what I would be looking at. If you're not a metals bull, which would make you a contrarian, but look, we're just local. We're talking day trade scalping here. You could still be a bull. You got to just see how this price action in here develops. All right. Now I'm already spending too much time. I just said I didn't want to spend too much time on the lower time frame, and then here I am. I can't help it. But this is what I do, man. Measure the high stuff, long time frame, and then drill down. All right. So that's silver. Let me just get away from silver now. Let's look at the ES. I'm not going to belabor the point. Is that a low? I thought this might could be 5 waves. I've measured this internal structure 3 different ways now. I think it's an A wave. This structure is hideous. It's kind of confusing. It's like 3 down. You could measure this as 3 up, and then you could another 3 down, then another 3 up, and then what the heck is going on? Okay, well, if it doesn't make any sense to me, and it's overlapping and gorpy and doesn't have a clear structure, I think of it as either a B wave or a wave 4. So by process of elimination, this is why would there be a wave 4 here? Well, there wouldn't be. So the most logical thing is to think of this as a B wave. And of course, I could go down the academic rabbit hole of Elliott wave and come up with WXY waves. There's other ways to count this. There's more complex ways, but the name of my channel is Elliott Wave Made Simple. So I'm going to forego any long academic explorations, and I'm going to keep it simple. If this is an ABC, A equals C, which you'll know what A equals C means if you watch my last video, which is only an hour long, and I'm telling you the value they're going to get in that 1 hour video. Get a notebook, take notes. You're going to learn a lot in 1 hour from that last video that I posted talking about learn how to use Elliott Wave to track 3-wave moves, something like that. Anyway, so this is the deal. This could be the beginnings of an impulse. This is the 3 up, and then you get a wave 4 pullback, and then you get one more shove higher. So if that's the case, and look, let's just keep it simple. If this can finish, if this can have a bullish Monday, and then do the usual thing overnight and just lollygag around and waste time, and then get a little corrective action right into Tuesday. I don't know. These arrows are just giving you kind of a concept of the overall shape, something like that. But the idea is if this can get up here and get rejected and come down correctively, then I like the idea of that being a wave 1, a wave 2, and then you get a juicy wave 3, and then a little small wave 4, 5, and get somewhere up into these yellow fib targets. Now, the thing I love, love, love about Elliott wave is we can dial in a more exacting target once you have more price action to measure, right? Like I can't project up here into these yellow fibs until I have a low. Now look, I was measuring for these same yellow fibs off of this low. So I had A, B, and then for you critics out there that go, oh, Elliott wave is BS because he's moving his labels. He's changing the count. Oh yeah, buddy, keep doing it long enough. Eventually you'll be right. You are missing the entire point of the Elliott wave methodology. I used to have those same criticisms. So part of the reason I'm doing this and just teaching and wanting to explain this stuff to people is because I don't want you to go through the torture that I did. Elliott wave is a dynamic methodology that changes because the market is dynamic. The market is a nonlinear, complex system. So you need, if you're going to have an effective methodology, it needs to be able to adapt and adjust along with the dynamic, nonlinear, complex environment that you're in. So Elliott wave is extremely powerful, but it's also what you get in exchange for the exactitude in the world of complexity is you get complexity. So the method is just very complex, unfortunately, because we're in a very complex environment. Now, there are simpler ways to do it, and we do it in the Professor Trades Club. We use zones. I'm using both. So anyway, now that I've just made another word salad, I moved the B label over because this made a new low by a few pennies. So this cannot be a B wave if this has made a new low here. It can't. But this can be a B wave. So I moved the label over. And now it looks like we have the beginnings of a new impulse. So now, because of what happened in the past, I have a better idea and clue of what might happen in the future. So if we get a finished wave up into this area and then get a pullback and then it begins another move higher, I will be able to measure that and get a more exacting projection of where price might target. But I'm not going to have any confidence until this price wave plays out. And if it does something different than what I'm going to expect, I'm going to take another look and try to discern what is likely coming next. That's the game. Okay, cool. So that's the ES. Scary. SPX, I'm not going to belabor this at all. I'm just going to say that this could be a wave 4 in a diagonal. Totally could be. This count is very difficult, very overlapping. And one thing I will say about that is when this count has been overlapping and moving that long and moving in the way that a diagonal would move, it just means the market is tired, it's running out of gas. So even if it comes all the way back up and makes a new high, if this thing hasn't bottomed already, there's nothing exciting and wildly bullish according to this structure of the SPX on a longer time frame chart. That actually could be the top. I'm not saying that it is, could be, but this could also be a huge diagonal with something like 1, 2, 3, 4 in a diagonal. And then now we're about to get a giant 3-wave move up for wave 5. And that is the top. So, but we'll see. It doesn't really matter the way I trade, but it is something to consider. Nasdaq. All right, Nasdaq. I'm much more focused on the Nasdaq in the trading club. The idea here on the longer time frame is it's possible that this bottomed already. It's entirely possible that this bottomed already. Notice the somewhat similar structure to what we have in the ES. So this came down. Very difficult to track because it kept extending to the downside. We had some incredible trades, both long and short, in the side of the trade, Professor Trades Club. So here, again, I'm keeping it simple. The clues are great where you have a 5-wave move and a deeper correction. And what preceded this 5-wave move has me counting it as A, B, C. And then now, again, similar to ES, it's very complex in here. So if I'm just keeping it simple, this made a new low. It's still in this orange box, which I consider a B wave box. So if I just keep it very simple, this box is holding support and we keep getting these moves up out of this box, even though it made a lower low here. Look at the reaction. So let's drill down one more. Okay, before I move on, so if this is, and this whole move up off of the previous low right here, A, B, C for an A wave. This C wave measured beautifully. In every way that I could measure it, it measured beautifully. So I'm confident this is a impulse. But you see, this isn't an impulse off the bottom because this is the bottom. So there was a 3-wave move that went net nowhere, then a 5-wave move. Well, guess what? That's an ABC, an Elliott wave. How valuable is that? So then you're expecting this pullback. And if I'm not mistaken, we caught in the Elliott wave room, we caught a juicy short right here. And then we caught some of the longs. Then we caught some more shorts. So we've been trading the crap out of this Nasdaq inside of the Elliott wave room. Listen, if you've blown up an account or you're having trouble with the psychology of trading, I'm not going to talk long here, just 20 seconds. If you've blown up an account, if you keep moving your stops, if you make a bunch and you give it back, and then you make a bunch and then you give it back and you're net zero, you're not going anywhere, and you're frustrated. If you're not feeling relaxed and you're frustrated, you got to come join the Professor Trades Club. In order to get the Elliott wave room, you have to join the Professor's Club. He's going to give you all the psychology you can ever know. We've got a large group of people of like-minded traders. Come join the group. It's nothing. It's a little over, it's $1 something a day. Find me a club or a Discord or anything that is that low in price with the amount of value you're getting. Okay, I'm done. All right, let's get back to the chart. So the idea is after this B wave bottomed, we have another potential impulse. Okay, and that's the idea. Because that's an A, B, we're looking for, again, I always like to use yellow or orange to discern where the 100 fib, the 1236, or the 1382 is for a target. And again, we can't give you a really accurate target until the thing plays out. So this is possible already completing a 5-wave move. And again, I'm not going to get into this nano stuff for the purposes of this video, but if you're in the club, you're going to get my nano stuff because that's really key. But this is clearly, to my way of looking at this, this is clearly already impulsive because it's already broken the idea that this is moving in threes. All right, I just can't take it. I'm only going to take one measurement, then I'm going to move on. I'm not going to belabor the point. It's just that I love measuring stuff. So, you know, the ideal thing, and look at that resistance right at the 100 fib, makes perfect sense. Yeah, man. So this makes perfect sense to me. If this could be 1, 2, and then if this comes up and gets rejected here, and then if we can get up and look at how that coincides with structure. All right. So the ultimate long, the safer way to do the long. Well, first of all, if this comes up into this area and starts getting rejected, you know, you could probably scalp some shorts in here. But then once it gets up into here, you could get a more substantial short, but then you want to get long. And I'll help dial that in on the nano. So there's a potential for this just to be the beginnings of 1, 2, and really what you're trading for is the wave 3 of C. Because wave 3 is the longest, most powerful wave. So if this is about to finish wave 1 somewhere up in here, and then you get a corrective, yeah, sure, we can short scalp a little bit for wave 4. We can maybe try to long scalp for wave 5, and then maybe we can short scalp for wave 2. But then you want to swing trade for wave 3 to the long side. You want to swing trade for wave 3 to the long side because that is going to give you a massive move in the Nasdaq. Wave 3 of C, even though we're still bearish, potentially, if this is just a 3-wave correction, it's just going to come up into here and terminate. So I'm not even though with a potentially bearish view here, you can still get a wildly bullish wave C. Isn't that interesting? And then, you know, we're looking for an impulse, so at least we're trading in the right direction, even if it's a C wave, or if it's the start of something much more bullish, we'll be trading in the right direction. Okay, cool. So what else do I got? Let me show you real quick. We already did the dollar. I didn't do the Japanese yen. Look at this. Tricky, tricky, but it came down, struck the low, came up very, I mean, bam, impulsive, and then it came down correctively. And look at this, it's holding support. This is actually a higher low. It's coming up impulsively. It's holding this pivot by the skin of its teeth. This is the ultimate target. So we'll have to see about the JPY. We'll have to see. But this is the idea. As long as it holds this support down here, and ideally, really, the pivot is the nano clue. The nano clue for JPY is this pivot. In particular, that last low. Okay, it came down and almost lost it, but then it bounced. So JPY, nothing really changed on my view. Oh, the EU short trade is so good. This is ongoing inside the Professor Trades Club. I did a little bit more work on this. I'm gonna take it off for sure at the 236. Depending, I'll get in here the nano. This is the 8-hour chart. I'm not going to get into micro nano for this video, but if the EU can get to the 236, which is 1.0779, I'm taking off a chunk. Yeah, I don't even have a nano EU worked up, but I'll do that. The only other one I was kind of looking at is the UJ, which you would expect this UJ chart to look like that. Because if the Japanese yen continues to get upside traction, it is going to take fewer and fewer of them to buy the dollar, which means this pair is going to keep coming down. That's the UJ. And GJ, oh, that is a UJ. I thought I had a GJ on here somewhere. That's a weekly GJ. And the 2-hour GJ. So similar idea here with the 2-hour GJ is this is clearly, locally speaking, it's come down and now it's bouncing up into support. So this could be a potential short as well. You got to be inside of the club though to get these signals. The Professor Trades is absolutely focused on currencies and trading currencies, Forex, all the time. Well, just take a quick look. The USD, MXN, Mexican peso. You've got that bounce. Got that bounce kind of holding below. I mean, my view is, my bias is bearish, and I'm thinking of this as basically a wave 2 bounce. It could even be a wave 4. I haven't drilled into the nano too much on that. But I am keeping an eye on this inside of the club. And there are definitely some great members trading this, like my boy Alex. Shout out to Alex. Shout out to Greta. Shout out to my friend David. So many great traders in the club. All right, so that's pretty much it. Thanks a lot for watching. Thanks for the likes and the thumbs up. That really helps. Keep the channel going. Look, the link to the club is in the description of this video. I know a lot of you guys used to buy me coffee all the time. I stopped mentioning that, but there's a link below to something called coffee. It's a little way, if you're getting a lot of value or not inside the club, why not buy me a coffee? I view it just as an energetic exchange. It keeps me motivated to keep making these free videos and putting out the content. If you're getting value and you're trading and you're grabbing massive pips, why not buy me a coffee? That's fine. I'm not going to say no. Plus, I actually love coffee. I'm a coffee freak. I only drink it in the morning, but I love me some coffee. Anyway, thanks a lot, guys, for watching. I hope to see you in the club, and I will see you on the next video. Thanks for watching. Bye-bye.